First of all, you think that the market is now factoring in this idea of a blue wave. What do you mean? Because the market's come down in the last 3 sessions?
Good morning, Becky. Yeah, as of kind of call it 4 weeks ago, the options market had, what we would describe as a hump in the term structure. So we saw the highest point of uncertainty in December 18th, which captures the December 14th date that state electors submit, their ballots at that deadline. And even as Biden's polls widened against Trump, that stayed stubbornly high in that December pocket specifically. And right around the time that Trump got COVID, we started to see that part of the options term structure collapse. And now to the point where it's collapsed so dramatically across both S&P and tech that, frankly, I think it's underpricing the risk that we do potentially have a contested election or one that's protracted. You're really not seeing that uncertainty pocket at all in December anymore.
Amy, we're talking about the options, but if you just look at the general stock market, none of the 3 major averages are even 4% from their all-time highs. How do you relate with what the options are telling you just to what the basic averages say right now?
Yeah, it's a good question. And the way I would think about it is the options market is giving you a sense of how investors are placing their bets at future points in time. So, if we see a greater amount of hedges in December or a greater amount of hedges in November, it's not necessarily telling you where the stock market is today, but where the investors think the stock market will go in the future. And we essentially went from investors feeling like there was going to be a lot of volatility expected in and around December to that part dropping off pretty steadily. And so there's another measure that we use, which looks at the imbalance of put options versus call options. So, ones that place downside bets versus upside bets. And that's also steadily declining. So meaning the placing of bets to the downside has actually started to decline as well. Overall, telling us that sentiment through year end is actually starting to be relatively bullish as opposed to bearish, and not that concerned with some of the tails that we had described kind of 4 to 6 weeks ago.
How much of that, though, do you think is factoring in a blue wave? How much of that do you think it's just factoring in the idea that maybe we know who's been elected president sometime in the next 6 to 8 weeks? I mean, I would think uncertainty and the nation kind of divided is an even scarier prospect than no matter who wins. I mean, knowing who's president would be helpful, I would think, for market volatility, to tame the market volatility.
Yeah, I actually, it's interesting you say that because, one thing I've discussed with investors is, frankly, at this point, whether or not Trump wins or Biden wins, if we know that by November 4th, that's a much bigger deal, at least to the volatility markets, than just the fact that we're not going to know, or it's going to be drawn out for a variety of reasons. And part of that isn't in and of itself because, we need to know who's president in the next week versus call it 6 weeks after the election. It's obviously related to whether or not we get stimulus handled, whether or not, who is actually going to be the administration that's handling an eventual vaccine, an eventual distribution of that vaccine. And it's interesting because a lot of people a year ago would say, why would a blue wave necessarily be good for the market? And from a lot of conversations we have with investors, it has nothing to do with the forward-looking corporate tax rates, the changes to tech antitrust. It's really about believing that Biden might be a better administrator of the vaccine when it comes than the Trump administration will be.
Shepard Smith here. Thanks for watching CNBC on YouTube.